Oh, and it would help if I actually get my mic switched on. Well, welcome everyone once again. Welcome to the Forex kickoff right here. This is the Forex kickoff regarding targets. We're gonna go ahead and look at targets. Hopefully everyone got their cup of coffee. I've got the big G right here, and we're gonna go ahead and get started. Now we did have some news come out yesterday. In fact, not just news but missiles yesterday. Iran's actually thrown out missiles at 2 US bases, Air Force bases in Iraq. Now, Trump has not responded yet, but I'm absolutely certain that he's in the bunker working out his plans. So listen out, the action is not done yet. We saw last night that we saw a lot of movement in the safe haven currency pairs. JPY, Swiss franc, we had US weakness. So everything's coming to a point. We're not done yet. Now listen here. Today's session is really about targets, right? We're going to go ahead and look at targets, which is a counter trading strategy, number one. Number two, it is also a leveling in strategy. All right, so we're not going to just add one position. We're going to add multiple positions in. So let's go take a look and see what we've got currently right now in the marketplace. And let's go ahead and take a look at the trades that are open with those positions in a lot of those safe haven currencies. Now, also, what has also been showing a lot of weakness is the Aussie dollar as well. That's also shown a bit of weakness as well due to all of this going down. So let's go take a look and see what's going on right here. All right, so I've got the Aussie CAD open up here, and we did have some movement to the downside. Now I have to go ahead and show you the trades that we've got currently active. You can see that you've got 1, 2, 3, 4 trades active. Euro, Aussie dollar. We're currently looking to sell on that one. We are in on the Aussie-JPY, Aussie Canadian, Aussie US dollar. So a lot of the Aussie, all 4 of them are Aussie crosses, believe it or not. And we're in on all 4 of those right now. Nothing else is actually setting up this week for trading opportunities. So let's go ahead and take a look at the trades that we have open. Here are the trades that are open right here. You can see there's the Aussie CAD, Aussie-JPY, Aussie US dollar, and then of course we've got the Euro Aussie. Now we've picked up 2 positions on the Euro Aussie at the moment right now. We're currently in at break even on the one. We're in profit on the other. And then you see the other pairs, Aussie CAD, we're currently slightly down on Aussie CAD. And Aussie JPY, we are actually in profit on Aussie JPY. And then Aussie US dollar, we're slightly down on Aussie US dollar. All right, all in all, we're in the money. Let's go ahead and take a look and see what's going on. And by the way, traders, I'm still going through the back testing. And as soon as I get those results up and ready to rock and roll, I'm still working on a couple of things. Once I've got all that set up, we're definitely going to go ahead and check out the details on that. Now, with that being said, let's go ahead and take a look at some technical analysis. Firstly, we're going to go ahead and jump into the Euro Aussie. Euro Aussie, we've got multiple positions in on Euro Aussie. So let's go take a look. Euro Aussie. We're short on Euro Aussie. We picked it up at the top right here. We can see that this is the target that we're chasing after right about here. Now, traders, we spoke about this yesterday. And we said yesterday that we're definitely not going to go ahead and hold on to positions, right? We're not going to go ahead and hold on to positions if the market is going to continue to show support, especially if we're selling. If it's going to show support and the market's bouncing the support, it looks like we're going to go up north a little further. And if we don't want to hold on to that ride, we're going to go ahead and just close out of positions, right? So what we're going to look at right now is how the market's set up technically. Now, I've said this before in a lot of my sessions around targets. I'm not really too concerned about the market setting up with these different levels of entry points that we've put in. I'm not too concerned about them until we reach around about 5 entry points. Then I'm going to become in a little bit more, not concerned, but a little bit more detailed on exactly where we are with inside the trends. So I don't focus too much when we go 1 or 2 positions in. But let's go take a look just for right now, because we've just kicked off the year 2020 and we've got some trades in right here. Let's go ahead and check those out and see what we want to do with those trades. So if we go to the charts again and we flip over to the 1 hour, we can see that is the target we're chasing after right here. But let's go ahead and take a look at the daily chart just to get a quick idea of what's going on right here. Well, this is the Euro Aussie right here, and you can see we are range bound. The range between the tops and the bottom right now is, you can see we've got about 300 and call it 350 pips or so, give or take a few because we're friends. We got about 350 pips, 360 pips right here. So that is the top and bottom of the range. So we're definitely inside what we're calling the contraction phase, right? Remember the traders, we spoke about that yesterday. There's three types of phases that we go through. We go through contraction, expansion, and then of course trending. We're actually inside the consolidation, which is contraction phase right now. And so target trading is perfect and ideal for these type of conditions. When we start breaking out into the contraction, the expansion phase, then we may want to go ahead and start paying attention to start looking to take profits on our trades that we're in right now, or work out at least some sort of idea as to which levels we want to go ahead and start closing out the trades, because once we head into the trending phase, we want to go ahead and apply more of a trending type strategy. All right. So yes, although I would love to say that target trading is great throughout the year, it can be, but then you have to really go ahead and reduce your risk on each trade so that you can go through the drawdowns that you go through in the trending times. And we spoke about it yesterday. We said that the trending times is around about 10%. We've seen really only about 10% of the time the market's trending, because 70% of the time the market's consolidated, and the other 20% of the time the market's in this expansion stage. And then, of course, the 10% that we're talking about, which is trendy, is what is left with the different phases. So, with that being said, we're in great shape here on the Euro Aussie dollar. And if the market is going to go up a little higher right here, we're looking at about, well, from where it's trading right now, we're looking at about 150 pips, which will probably pick us up in maybe another position. I don't think we'll get more than 3 positions unless we break out of the range. Now, if we do break out of the range, then guess what? If we break out of the range, then we are going to be looking at the possibilities of the market now going into the expansion stage. And if it goes into the expansion stage, guess what? If it goes into the expansion stage, we'll then start thinking about and let me show you what it looks like right here. I'm a little bit excited about the expansion stage though. So if I look at the whole trend here within the what we have currently right here, we're trading slightly below this trend line right here. Now I'm going to go ahead and put in some additional trends here from the top here, and this is what we've got going here. All right, so this is what it looks like about here. So we're trading slightly at the top. We're actually at the resistance level of this downward trend line. Resistance level right here, which means, traders, that we should be seeing price moving back down south. Now, if it does break up to the upside, then this is what I'm excited about. I'm excited that if price does want to move back up right here, come back to retest this level, all right, and that's the top of that high right here. That could be our expansion stage, which means that price is then going to come back down here and then start trending further down south. So this could be the expansion stage before price goes ahead and moves down south. So I'm not too unhappy with the way it's set up right here. And if it does go up and we add our new positions right here, it's going to be a good profitable time as we go back down into that trending phase. So the trending phase may end up being bearish, also because of the fact that we've got this new bearish trend taking us down south. So not too unhappy. But I'm also not oblivious to the fact that we are seeing some details coming all across the board, and that we are seeing price moving according to the news. And there you can see Iran strikes back. But is this the turning point for the markets? All right, so we've got all of this news coming down based on what's happening right now between the US and Iran, and clearly we're not done yet. And traders might be saying, a lot of traders might be saying, well, big dog, with all of this stuff going down right here, should we be looking to avoid any of these pairs that may be affected by this the situation? And the pairs that would be affected would be, of course, JPY, Swiss franc, US dollar, and even some of the Asian pairs like Aussie and New Zealand dollar as well. We've seen some movement in that too. So yes, there would be, of course, some indirect effect on some of these currencies and some direct effect on some of them too. So you could stay out, but you know what, traders, we need volatility. What we don't need is flash crashes. That's what we don't need. Nobody wants a flash crash, right? Unless, of course, you got stop losses that are so wide and you got entry points being leveled in. But we don't really want a flash crash, right? We don't want to go through that process again, especially the one with the Swiss franc, with the unpeg of the euro. That was the worst ever because banks, oh, well, not banks, but brokers closed down due to that. Traders just lost everything. Some of the traders lost everything due to the unpeg of the euro with the Swiss franc. But we're not going to go through that again. So the conservative side, if I had to go ahead and give you the answer to that, I would say that from the conservative side, yes, stay away from these pairs that could be affected dramatically by the movement of the market. The more aggressive side of me would say, well, if we reduce our risk to accommodate for any sort of like action taking place on these particular pairs, we reduce risk, which means that we still got a piece of the market, we're still getting involved in the market, but we reduced our risk that if the market does move, go ahead and accommodate it for a 2,000 pip move, against you. Accommodate it for that type of movement, because if we get those type of moves, market's going to recover. We're going to see a bounce back, right? We're not going to see this just drop down 2,000 pips and not recover. In fact, over the last 10 years, I have not seen the market drop 2,000 pips and not recover. So we don't expect it to not happen now as well. So what we will do is we will protect ourselves and just to reduce the risk. So that's something we're going to go ahead and look at. Now, I'll be honest with you, I am still not convinced that the weekly targets is what I want to go ahead and chase after this year. I'm doing the breakdown. I'm actually breaking down the pairs, and if I see that the daily time frames are better for trading, all right, daily targets, I may move and switch over to the dailies. But for right now, we're going to be focusing on these pairs, on the weeklies. All right, so that's the Euro Aussie. Now, let's take a look at Euro New Zealand dollar. We haven't seen anything fire off on the trading account here. Let's go ahead and take a look and see what's going on with the Euro New Zealand dollar. And I'm going to go to the target. Oh, and that's why. Price has already moved down to our target this week, and so therefore we've got actually a hit target this week on this particular pair. We're waiting for a setup. It's now hit. We go ahead and clear up the table there. So we've got no trade happening right here. So we've got pretty much no euro crosses other than the Euro Aussie that's gone ahead and fired a trade this week. Nothing on the pounds, believe it or not. And trust me, if you haven't looked at the pounds already, man, I'm telling you right now, those pounds are ready to rock and roll and blow to the north side. Why? Because it's setting up in a very nice bullish channel, and it's hit support at the bullish channel. I wouldn't be surprised if we're going to start seeing some movement out of the pound pairs very soon, because it's looking like it wants to take off to the upside. Now, again, we're at resistance. One of the traders yesterday called on the pound JPY in my trading room, said, man, the pound JPY is on a 1 hour head and shoulders pattern. We should see this head down south. And he's got good merit to think that because of the head and shoulders pattern, there's a King's Crown, because of the King's Crown pattern that is setting up. But the fact is, we're going to stay within our channels. This is like bowling, man. We don't want to have those boundaries up, whatever they call them. We want to be able to trade freely, right? But unfortunately, when we are in a channel, all right, we are somewhat restricted to trade anything bearish, because one thing we don't want to do is sell at support and buy at resistance. So we don't want to. So that head and shoulders, or the King's Crown that we saw on that 1 hour pound JPY pair is actually at support. So we're definitely not in on a sell right now, because we don't want to sell at resistance. But we don't want to sell at support. But if that support breaks, then that the King's Crown, I keep calling it head and shoulders, but that King's Crown will then become a little more interesting to pay attention to and then follow. But I would still probably wait for the market to break through the support, come back to retest that support, which now will become resistance, and then start selling off at that point. Now I'm using in my trading EAs, they all got confirmations before the market goes in and puts trades in. So even though I see an opportunity for buying or selling, just like we've seen with the pound, if we go ahead and set a system to start firing trades, it's going to wait for the confirmation first for deploying that trade north. So clearly that's something we need to wait for. Now let's get back to what we've got currently right here. So Aussie-JPY, let's take a look at Aussie-JPY. We only have one trade in on the Aussie-JPY, and we're chasing after this bullish target up here at the top. Now there's a lot of channels that I've got right here. You can see I've got channels over here. I call this my signal channel, my wave channel up here at the top, the wave rider right here. So we're certainly going to be moving into what I call the neutral zone to get to that target. Now I'm going to go ahead and take a look at the larger time frame and get a bigger picture of what's going on here in the larger time frame. Well, traders, that was the news coming out with the strikes on the US bases in Iraq yesterday. We had a big bearish move to the downside, and in some way I'm thinking that this could be part of the expansion phase that we may have gone through. In fact, let me go ahead and take a look at the lower time frame right here, and let's see here. Well, if you take a look over here, we did have a little bit, no, we did not. We had a lot of consolidation right here. Check this out. So we had some consolidation right here. Price then went into the expansion, from contraction to expansion, and now we're going to go ahead and trend. So this could be our trend going back up here to the top side right here. Now, I always look at this and say that expansion phase can be two things right here. We can see the market hold inside this area right here, then break out, go up, and then start trending this way. So part of the expansion phase could also be a little push up to the top side, and then the trend start to take off. And this, my friends, is where traders lose a lot of money. Traders lose a lot of money during this expansion phase right here, okay? Because where they're looking to sell, market turns around. Where they're looking to buy, market turns around. So they're losing, but then they miss out on the big run of the trend. So it's good and it's important to know where you are with inside the market phases in order to be able to take advantage of those moves. All right. So with that being said, then yeah, we could be still in this expansion phase, which means price can start working to the downside. Like I said, we're not done. We're not done with the this war between Iran and the U.S. President Trump has not responded yet, and trust me, any free TV, he'd be right on that. But obviously, he is clearly busy with plans and actions of what they're going to do and how they're going to respond to what just happened. He's not going to lay down and just take it. I definitely don't think so. I definitely know he's not going to lay back and take it. Something is going to happen. There is going to be a response. We are going to see the markets move. So again, be aware that some action is going to be taking place. We're going to get some movement in the market very, very soon. It's going to happen this week. I don't think it's going to be extended to next week, but we'll take a look and see what happens. All right, so check it out. So we're in this expansionary phase. So let's go ahead and take a look at the large time frame. I do love this nice little wick right here. Look, we still got some trading time today. We're not done yet. All right, this candle is a daily candle. It can still go down bearish. It doesn't mean that we have got a confirmed trend set up or a confirmed indecision candle right here. Long wick to the downside, which in most cases indicates upside movement expected. Now, we are holding inside this rising wedge. And I normally look at the rising wedge and I say, when we see this rising wedge, normally has 5 hits before price goes ahead and breaks out. Let me count here. 1, 2, 3, 4, and 5. There we go. So 1, 2, 3, 4, and exactly that. Check this out. And I'm going to go ahead and use some of this right here. Check this out. This is as price comes into this this rising wedge. It goes ahead and tests it once. It goes down here, tests twice. Here is 3 times right here. This is the 4th time right here. This is the 5th time. Now, when we hit the 5th time, then we're expecting break. So overall, I may, and trust me, I'm in some of these Aussie-JPY trades right here, but I may be expecting price to want to go ahead and actually move further down south. Now, I do see that there is a possibility of the market coming back up to retest this backside of the trend line. But overall, this Aussie-JPY is in fact set up to head back down south. Now, if it goes ahead and takes out the high here, then we could absolutely be going to this downward trend line right here and then working it way back down south. So there's that possibility. Absolutely, that could happen right here. There's no doubt about that. All right. So now let me go ahead and take a look at. So we'll keep an eye on this. All right. You definitely keep an eye on this. The only thing I don't like about the positions that we do have right here. Take a look here. We've got Aussie JPY. We're going to buy here. We're in the money on this one right here. The only thing that I'm a little uncomfortable with is the fact that if price does move down, it's going to move down all the way down to this level of support here and even go down further towards this downward trend line. So if it does go down here, it's very unlikely that we're going to come back up and meet up with our entry point or our target that we're looking at around about here. So if price does drop back down, what I've got to look for is I'm going to say, do I have enough? Do I have the right money management in play in order to ride this wave down, add positions in, so that when price does work its way back up again, I could maybe not get out of my initial target, but I could get into the money when we have this correction move. So if I look at this, and let me go ahead and take a look at the drop. If I have this right here, and let's say price drops all the way there, that's 700 points, and I'm entering every 56 pips, probably around about 56 pips. So I'm looking at 56 pips, probably going to pick up maybe 13 positions. And that's, look, man, we may pick up 13 positions on this if price moves straight down. If price goes ahead and moves straight down like this without any sort of correction move, then we're maybe picking up that amount of positions. But we all know that the markets do wave most of the time. I would say 95% we do have nice waving type of movements, right? When we are trending, which is only 10% of the time, throughout the market action that we see. So if we are going to trend nicely, all right, then what could happen is the market will go down, come back up, go down, go back up, go down, and head down to the downward trend line. So on these recoveries, right, we'll be able to pick up some good trading opportunities. All right. Now, one thing we have to go ahead and point out right here is, remember we spoke about it, expansion phases, and we spoke about trending phases. Well, if we are going to expect price to move further down south, then this right here would absolutely be our contraction phase, and this we are now in is expansion. So which means that the Aussie JPY could be heading into a trending phase, which, by the way, traders, we may want to go ahead and get the heck out of Dodge with our target trading, take our profits, and start thinking about trending moves and look at the market and say, hey, if the market's at resistance, get out of targets, take your profit, get the heck out of Dodge, and then start thinking about selling that short. We're going to talk about it in my trading room later this afternoon. Well, later this morning at about 10 o'clock. We've got a trading room session. So check it out on this right here. So that could certainly happen. No doubt about that. Let's check out what other pairs we got going here. Aussie US dollar. Let's break that one down. This is the daily time frame. And looking at this right here, we got that long downward trend line. We're holding in a trend going south. We're looking for a correction. There's no doubt about it. We're looking for a correction move on this. So expecting price to work its way back up again and then start heading back down south. All right. So this is definitely something that we are going to be anticipating. we're locked inside this consolidation. We'll see price moving up to the top of the range and then work its way back down to the bottom range. So we are back inside the range. We're also coming off that downward trend line right here. So price could be expected to go up. That's okay. We've got positions that we are currently long. So we'll make our money going up to the top side right here. And to be honest with you, when we get to the top right here, I may go ahead and move away from target trading this and then actually start thinking about swing trading it back down south. Because this is going to be a nice little trend down here just towards the support of this consolidation support level, and then move further down south towards the level of support coming off this. Let's take a look here. This downward trend line. Look at that. That trend line's all the way down here. Did I have it right? Yeah, pretty much. Yeah. No. All right. That sucks a little bit. Hold on a second. Let me try and do this a little bit better. Oh, that's actually how it looks like right here. I'm going to kill some trend lines here. Let's clean up the charts a little bit there. Take out that. Alright, just cleaning house a little bit here. Hey, traders, it's important to clean up house a little bit. Okay. Oh, that looks a little different, right? Alright, so let's put that consolidation back in there. And mark off that there. That is our range that we just recently traded out and traded back in again. Alright, so we've got this upward channel. Alright, so, hey, now that I've done this, we're looking at a little different setup, aren't we? Alright, so if price is going to hold off at this support level right here, then we're going to think about buying long again, right there. Buying long again. So we're actually broken down that, we've broken out of that downward channel. And so we're thinking price to start working its way back up. We had a correction here, and that's fine. But yeah, we're expecting price to go ahead and work its way back up again. So we may not get to the bottom of this channel. And coming back to this right here, if I'm going to be adding on, I've already got one buy-in on this. If price moves down a little lower and we start buying more, look, I'm looking to go ahead and hold on to my target setups right here and continue all the way up here to the top. If price moves and breaks below here, then I'm expecting price to come back down to this support. So that's a different ball game altogether. And so what I will be doing is preparing myself for the possibilities of price holding at that support and then moving bullish. But if we break that support, guess what? Change of plan. Then it's going to be recovery stage. Get out of the buys and then look for price to go ahead and retest resistance and then start selling off again towards that support and then down maybe in back inside the channel. Now I'm way ahead of myself, so let's move on. We'll wait for that time to come into play. For right now, I'm going to continue to buy as I am doing right now based on these targets right here. And you can see my target on this one right here is set at 69.68, so it's not too far away. All right, where we're trading right now, it's about 80 pips away. We're about 80 pips away from that target. Okay, now let's take a look at the. So we looked at JPY. Let's go and take a look at Aussie CAD. And here's Aussie CAD right here. Aussie CAD showing the same sort of indecision. Also a big bearish move right now. Last night, based on the news last night, and we're looking to work our way back up again. It's broken through this this range here, and so we're looking for price to possibly move back down to this support down here. So we're looking for a support level to be met down here. So we're looking for price to hit support and go back up again. Now, even though we have broken through this support here, price is going to come back to retest it. Now, if we break back inside that support, we're going back up to the top right here of that resistance. And my friends, this could be indicating that the expansion phase is now well on its way, especially after we've broken through that support level. And if we come back in again, that means we're going to go through this expansion level right here, and we're going to head back up to the top of the range, and that could be then heading into a trending phase. So I think we're probably going to be looking at around about mid part of 2020 before we start heading into trends. Now that's believe it or not, that's actually how things have been working out over the last few years. We've been seeing the markets during January all the way up until May, June, really be more in that contraction, expansion phase. And then around about June, July, August, we're starting to see the markets actually trading very aggressively. And then and you'd think that during the summer period, trading would be a little bit more constrained, right? But what's happening is there's a lot of news coming out when markets are a lot more thinner. All right, so when we have thin trading taking place during the summer period, and we have these news events that come out, it extends the market, or let me say this, exaggerates the market in the trends that it currently holds. So when it holds a trend and we have news, we have an exaggerated move, and that's probably why we had so much movement happening over the summer period in a trading phase than we have in any other period of the or season of the year. So that's something that we need to consider as well. But if you look over here, we're definitely looking at a recovery point on this. And so if we are looking at a recovery point, I'm pretty comfortable holding on to this trade and holding on to this buy. And our target to the upside on the Aussie is going to be, the Aussie CAD is 90.60. And we're currently trading at 89.32. So we've got about, let's call it 70 plus 60. We're looking at, in fact, where's our next entry point on this? We should be getting the next entry point on this pretty soon. Let me take a look here. Because we're about 70 plus 60. We're 130 pips away from our target. So let's take a look here. There should be, and I'm going to go to the 60 here, 52 pips. Let's go to this right here, 1 hour. Oh, of course, our target is, all right, so my bad. Yeah, we entered, what did we enter? We entered late on this. So we got in at 89.52. 85.52, so we'll probably pick up another entry point around about 8900. So we're about 30 pips away from picking up another entry point to go long, and that's, well, if this resistance of this channel right here holds, then we could go a little bit further down south. But yeah, I think we just missed out on the entry point right here. Let me see a low here. Yeah, you see here 89.02. So our entry point would have been, and I think our EA is going to tell us where the next entry point is going to be at. Let's take a look here. Yeah, we're exactly, where's that pair right here? Aussie CAD. There it is. 52. Yep, 52 pips away from the second entry point. So if you take a look at this entry point, that's at 89.52. So yeah, 8900 is exactly where the next entry point is going to be. So, and that would be just about here. If you take a look here, right about here. So price came just shy of actually picking up a new entry point that would have been picked up right about there. All right, so we'll see how things playing out. All right, we'll see how things pan out. Definitely, we're at the mid part of the week. We'll have to see how things pan out. We've still got a lot of news coming out this week that we need to pay attention to. ADP numbers that have come out this morning, positive, really positive for the US. They were expecting 160. It came out at 220. Sorry, 202. So that's a big number right here compared to what the forecast was. The revised numbers also ticked up higher as well, from 67K to 124K. Someone certainly messed up with the math then last month, giving us the wrong numbers on that one. And then of course we've got, hey, check this out. This just popped up on the calendar right here. President Trump speaks, and it's definitely going to be on. Let's take a look right here. Yep, he's due to speak about Iran. So that is definitely taking place at 11 o'clock today. So check out the movement at around about 11. And then don't forget non-farm payroll this week as well, traders. Markets will definitely react to that. Listen, as a target trader, as a target trader, we welcome volatility. All right, we welcome volatility, but we have to make absolutely certain that you are going to make sure that your risk is low. You don't want to go ahead and over leverage your positions. It's gonna put you into trouble. Trust me. Trust me. I've been there, and it's not a good place to be at. All right, so make sure that you go ahead and position yourself in the market, but don't over leverage yourself. Keep your risk very low, because if things do happen with what's happening now with Iran, we don't want to be caught up in something we can't get out of. Right, traders? Well, anyway, that's it for us this morning. Trust everyone enjoyed the cup of coffee that I made for you. Just kidding. All right. You guys have an awesome day today. I will see you back again tomorrow to go ahead and check out what the markets are doing. It's FxBigDog signing off.